Good day to you, my trading friends. It is Tuesday, December 15th, 2020, and today is a cherry bomb trade, and it's in. We're looking at Pfizer. We already have a Moderna trade on in our IRA portfolio that didn't work out, worked out, didn't close it. Now it's a total loss. Hey, that's why we're testing our theories here. But today's trade comes from Tasty Trade, and it is Pfizer, which has a liquidity rank of 4 out of 4, an IV rank of 27, almost 28, and it has a moderately strong positive correlation to the SPYs, which as of right now, looking at the futures, they're up almost 0.6% right now in overnight futures trading. Very cool. All right, so why don't we hop into ThinkOrSwim, our simulated trading platform of choice, and get cooking. Hi everybody, my name is Neil and I want to thank you again for joining me. And if this is your first time here and you're new to this channel, down below in the description is a bit.ly link to go over to Tasty Trade's email sign up page. It's a bit.ly link just so I know if it's getting clicked. But what we do here, just a quick little, elevator pitch, if you would, is that we use ThinkOrSwim and its simulated paper money trading platform to test our skills, to begin to take the fear out of trading and to, have a group of like-minded people. So if you are interested, hit that subscribe button and ring the bell so you'll be notified when our trades are released so you can get in them with us. Now, moving on screen here, you can see the portfolio that we've built out. And yeah, we've got some winners, we got some losers, there we are. In case you wanted to see my overall PL for the year to date, just so I'm not hiding anything, I always like to do that. All right, moving on. Let's go over to this Analyze tab here and click on, let's go to charts. I've got PFE for Pfizer typed in here, and you can see in that email that we got from Tasty Trade this morning, it talked about the 1.5 standard deviation move downward. There it is. Woo! Right? It's had 4 down days, which doesn't make sense with a company who just, is basically as it said, the poster child for vaccines, right? So, oh well. It is a relatively low priced underlying, so I wonder how you guys would feel, although we're doing a debit spread, about a naked put in a company like this. I don't know that I would feel at this current position, that we've hit a place where I feel like maybe 36. I don't know. Let's look at that later. But for now, let's examine the trade that we got sent to us from Tom Preston. All right, so we're going to be in the 38 days to expiration as of today, or the January 22nd weekly expiration. Because we're doing a long call spread, we're going to, of course, be right down at the money. A lot of people like to speculate with buying calls, right? So let's say that you bought this 38 call here for $282. You'd be in the money already. You'd have some intrinsic value, right? Let's just explore that real fast in that risk profile here. Let's set that to expiration for 123 and then set our slices to break even. So you'd have a 37% probability of breaking even or profiting at expiration if you were to just buy that call. So remember that number of 37. Well, Tasty Trade Mechanics has us never doing that, right? Putting the probabilities against you that bad, 37%. So if what we then do is take this cost here, cap our profits, right? By saying, look, we'll only be able to make a defined amount of money, and we're financing some of this price. We're going to be taking off, let's call it $180 off that price, right? So I'm going to hold down the control key, click on the bid for the 40, and now we have a $1.50 wide spread, okay? Which we in this case would be paying $1 for, which is a little different than the price that you see in the email. Oh, that's because it's the 38.5. Hang on a second. Let's do the same numbers here, silly. All right, let's try that again. 38.50, that's what we were supposed to be doing. And let's go back to the probabilities. Okay, 35% probability is what we were looking at if we just bought that call. Now, in this case here, we'll then go back to hitting the control key, doing the 40. Now we have a $1.50 wide vertical, long call vertical, in which we'd pay 71 cents instead of the 200 and whatever it was, 50 something cents, right? $250. So yeah, that's a much smaller cost, right? But what's our probabilities? So now that you can see here, we've built out our trade. We've got our one contract here, paying 71 cents for it. Let's go over to the risk profile and check out our probabilities in this case. So the date here is still set to expiration, so we can see our expected move on the screen from here to here. And then we're going to set the slices to break even at expiration. And so instead of 35, 6%, 35%, now we're looking at a 47% probability of profit on this one. Now, that still is not awesome, right? In this case, because here we're risking 71, able to make 79. So that makes sense in that if we can make more than we can lose, that we would have a slightly lower probability of profit in this case. But if you get the email here, and I do want to switch over to Tastyworks, which is never there. It's so frustrating. I have to go do this. I don't understand why it does that. But there it is. There's the same trade, but in Tastyworks. And I want you to pay attention to the fact that there is this P50 metric here. That if you use Tastyworks, whether it's on the mobile platform or on the desktop platform, which you're seeing right now, you get the P50, which gives you the probability of making 50% of your maximum profit, which is part of the Tasty Trade mechanics. If that's a time to manage your trade early, as they would say, if you get to 50%, take the money and run. And there's a almost 70% probability of us collecting half of that profit, right? So let's call it $40, right, in the next 38 days. So those are some pretty good numbers. That's what we're looking at here. Let's head on back over here to ThinkOrSwim, and we'll be able to right-click this trade, move on to the confirm and send phase, where we see the max profit of 79, the max loss of 71. We know there'd be a probability of getting half of that of almost 70%. Right? So that's pretty good. I want to go ahead and click send on that one. That's going to put it into my working orders over there. So why don't we, for ha-has, since we put on a trade yesterday that was a naked put, why don't we go to the IRA and consider a naked put here in Pfizer? Not that I'm going to do it, but we did this yesterday in AUY here. It has moved down, so therefore we are potentially, and I think it's in the money already. Or, well, it was. So yeah, it'd be kind of neat. That was night got combined there, and to get a few shares and maybe do some covered calls. All right, let's go up to this Analyze tab, add simulated trade, and consider a naked put in this case here. So I know oftentimes Tasty Trade, when they sell naked options, they go to about the 16 delta. We don't have that number, but 17 is pretty dang close. So if I come over here and I click sell, and I've got a naked put here, and it's at $35, right? So if we lost and Pfizer went out of business in the next, 38 days, we could lose $3,500 minus the 44. So let's just call it $3,500. And yeah, that'd be unfortunate. Of course, we would manage it before then if we could, assuming it didn't, rapidly just decide to go out of business. But let's go ahead and look at the risk profile for a trade like this. That slices to break even at expiration, same expiration. We'd be looking at a 78% probability of profit on this one. So most of that expected move is covered by this trade here. So I wonder, how do you feel about this version of a bullish trade? So we have two different bullish trades to explore here. Which one would you go with? Does the defined risk of a naked put scare you? Or are you more like me than naked calls are the ones that give you indigestion, heartburn, that whole feeling? All right, this one doesn't fit the mechanic of high volatility, so I don't know that I want to do this one. But I do like naked puts. Just going to go out there and say that one. All right, going to go ahead and I'm going to delete this trade. And yeah, If you've made it this far into this video, I want to give you your thumbs up. I do appreciate you, each and every one of you, your views, especially if when I hear from you in the comments. It's so great to hear from you. You know, keeps the fuel on the fire, right? To keep doing this. All right, so until I see you in tomorrow's cherry bomb trade, everybody, happy trading.